Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. So in the gold market, really very weak activity in the recent couple of months. On the monthly chart, as you can see, the April actually stands in the side round with the March. March, it was very tight trading range with no impact actually on the long-term picture. So at the first glance here we have some bounce, and we could trying to talk about some fragile bullish background, especially in the recent week. So we have taken fundamental view in today's report. We see that fundamental inflationary pressure is reduced a bit in this week, has got some relax, that has changed the sentiment slightly on the markets, suggesting that upward retracement could be a bit deeper in the current situation. And within the perspective of the 2 or 3 months, it indeed could be so. So we do not exclude that we could get significant bounce on the gold. Since on the dollar, actually, we expect to get the new lows on the monthly chart. That should become supportive for the gold, and I will not be surprised if we will get the action to the 1850 maybe, or even to the 1950 area, the 618 resistance on the market. But according to our long-term fundamental view, we think that this is last effort with the bullish trend on the gold market. So in fact, we stand in the final stage of the bullish market. And with the setting of the new lows on the dollar index, the new stage of the bullish cycle of the economy should start, which will be bearish for the gold. And gold could turn to the bearish action for a few years. So that's our long-term view on the market. But before this stage starts, we think that this could be 2 or 3, maybe 4 months till this moment that gold keep chance to show this last upside effort, as we call it. At the same time, in the current moment, it stands a bit tricky because every time we talked about 1650 support, not support, the major target. It's not the butterfly. I'm talking about this A, B, C, top, D pattern on the weekly chart. And here there are a lot of things that I do not like. First of all, I do not like the acceleration here, then sideways action before reaching of the 1650. I do not like very slow and choppy reaction on the strong confidence support on the monthly chart. So 1685, it's a monthly confidence support that deserve a significantly stronger reaction from the market. But within the couple of weeks, we actually do not see this reaction. And I'm keeping in mind untouched target. Maybe that's the reason. I mean, currently only technical reasons. So that might be the reason why we do not see the major reaction. So existence of the 1650 target makes overall situation tricky. So we somehow should combine the chance to reach this target, maybe then starting of the major pullback, or gold could show first major pullback and hit the target later. So it's a lot of different options exist how it could happen. But the reality is so that upward reaction on the weekly level, so the monthly confidence support, very weak. It's too weak, I would say. Target is unreached. And here, even on the daily chart, despite that we have some upward action at first glance, even bullish divergence, take a look at with the bullish trend, market mostly shows sideways actions. Yes, it's a bit wide, but it's sideways. And market for the second time tests the minor near standing 30% resistance. Well, I would say that almost never minor near standing daily 30% resistance becomes the destination point for reaction on a strong monthly support. It almost never happens. So it means that something is wrong with this upward action that I do not like actually in general. And in current environment, we do not exclude the chance for taking the long position. But with the current situation, preferably the perfect scenario is to get long position only when the market hits the 1650. But since there are a lot of uncertainty stands around that, in the current situation, it would be nice if we will find the chance, if you still would like to go along, find the chance to take the position as close to the lower bottom of the rectangle as possible. For instance, market starts reaction to the downside, comes in the lower part of the rectangle. Here, you could think about taking a long position, because here you at least could try to involve the existing 1615 target, so with the stop order. So if you, for instance, take the position somewhere near the bottom of the rectangle, you will be able to place stop below 1650, including the potential drop right to the 1650, and protect your position. When you stand at the 1750, well, it's very difficult to do since it's really big distance. So this moment it will be very expensive. That's what we see on the daily chart. On the 4-hour time frame chart, we already discussed on Friday this agreement resistance. Market has completed the ABCD OP target, creating agreement resistance, and we suggest that it might be some downside reaction. That has started. In fact, we have gotten a triple to sell here. With this reaction, market has already completed the minimum target. Usually it's 30% of the upper direction, so it's 1730 approximately that's been hit. But at the same time, we do not exclude that the downside reaction could be more extended because of two reasons. First of all, on the hourly chart, market is forming head and shoulders here. You can see left shoulder, head, right shoulder, and it's forming a few grabbers that suggest drop below these lows. That's one of the reasons. Second is that, take a look on the interest rates, this 4-hour time frame on the 10-year yields. You could see the same pattern is forming. And this pattern suggests also a bit more extended upward pullback on the interest rates. That also could make the pressure on the gold and force it to show a bit deeper retracement on the intraday charts. So currently, you should, if you're trading on the intraday charts, you need to keep an eye on this head and shoulders pattern. And as usual, we do either, if you would like to go short, you could consider top of the right arm, maybe with placing initial stop somewhere above the head or something of that sort, and trying to make the bet on the head and shoulders. If you would like to buy gold, you could keep an eye on the possible failure of the head and shoulders. So if market will start climbing high, returning back to the top, that could become some evidence that head and shoulders is failing and market is ready to go up. But at this moment, guys, if upward breakout will happen, it could lead to the more serious consequences, because in this case, the daily rectangle also will be broken up. And in this situation, we could start talking about deeper reaction and maybe reaching on the 1830, 1850 area. That is what could happen if rectangle will be broken up on the next week. So that's been said. In the current moment, if you trade on a daily chart, overall situation stands not very good. The bullish context is very fragile here. And to protect yourself, we would like to say that we call, if you still would like to buy gold, try to do this as close to the bottom of the rectangle as possible. With the stops, that includes possible reaching of the 1650 target on the monthly chart, on monthly weekly chart. That's for the daily. On the intraday charts, keep an eye on the head and shoulders pattern. Dealing with the head and shoulders, starting to work it, and with the preferable simultaneous monitoring of the interest rates. With the head and shoulders here and on the 10-year yield starts to work, just calculate this ABCD to the downside. You will find the point that market could achieve with this head and shoulders. Any hints of the failure of the head and shoulders here means that upward breakout is possible. So you could act accordingly if you trade on intraday charts. So you can see overall situation stands not very simple on the gold, especially because we actually do not have some clear patterns that we could use for trading, and that's why it's very difficult to make the reasonable decision on the gold market currently. But that's actually what we have, and we have to work with the stuff that we have right now that exists in the market.